Good morning. Today, as well as doing your banker work, I would like you to have a look at this assignment. We're looking a little bit at two different types of investments and seeing how they work and comparing their returns. The reason behind this is that you've done a little bit in banking and you've looked at share markets, and we're going to pick out a portfolio later in the week. But what I really want you to see is that different things that you can do with your monies, different types of savings and investments give you a different rate of return. Now, part of it depends on how much money you have, or it could depend on how long you have to invest it, or it could depend on how willing you are to lose it. Some more risky investments, there is a chance that you could lose all of your money. A few years ago, there were finance companies that would give out loans, and you could invest in these finance companies and buy a debenture or a loan, a bond, where you could say, I'll give you $2,000 or $5,000 in return for an interest rate, which was quite a lot higher than what the banks would give. But these rates were much higher and their risk was much higher, and several of them went bankrupt and people lost a lot of money, because if they went into receivership and they paid back what they could, but maybe you'd get 20 or 30 cents for every dollar that you invested. There were a lot of small investors that ended up losing some money, so that was a high risk. So today we're looking at investments, we're looking at savings, which you did a little bit of at the start of Banker, but I've got a wee worksheet for you, so I'm just going to go through it. So banks have different interest rates depending on how long or how often you've got the money. I've got some banks there. If you just click on one of them, it will take you to their website, and then you'll have to have a little hunt. So if we click on one now, we say we'll go to the Westpac one, we have to have a little look. So if you go up the top, they've got all of these things. So there's everyday banking, home loans, credit cards. We want to find out about savings. So we could look at everyday banking, savings accounts. That's where we want to go. So let's click on everyday banking and see what it gives us. And then we'll scroll down and we will find that's how to join Westpac savings accounts. Click here. Now we'll have a look and see all of the banks have a page that looks a little bit like this, so you can have a look. So if you have a look, they've got 3 different rates here. And so for this part of your assignment, I want you to find out what those 3 rates are, why they're different, how you get 1.25% instead of 0.05%. That's a really low interest rate. You'd have to have a lot of money in there to make that significant. So you pick one of the banks. It could be one of the ones that I've listed on the sheet, or it could be the one that your family banks with, or the one that you're interested in. Whatever. You're going to tell me about 3 different types of savings accounts, which one had the highest and why you think there is a difference. And then just an example, if you had $10,000 and you put it in, then how much money would you get? After that, we're going to do a spreadsheet, and I'm going to do another video on how to use the spreadsheet. So once you've done the spreadsheet, you're going to do an analysis of it, and that's your work for today, as well as going into Banker and setting up your own portfolio in there. Okay, thanks for listening. Bye.